Bismillahirrahmanirrahim. Assalamualaikum and hi everyone. So my name is Muhammad Sofwan bin Muhammad Syahimi. In this video, I would like to present about the topic of the Islamic investment management. So let's proceed with the definition. So Islamic investment management, also known as Sharia compliant investment management, it is the process of developing and managing investment portfolio in accordance with the tenets of Islamic law and finance. So we are going to proceed with the key principle of Islamic investment management. So what is the key principle? So the first one is the prohibition of riba. Prohibition of riba is one of the things that in Islam we are encouraged, which is to prevent the riba, which is the usury of the interest. So the prohibition of riba or usury of interest, for the first one is avoidance of interest-based investment. Instead, investments are structured to generate returns through permissible means such as profit sharing, rental income, or appreciation of tangible asset. Sukuk as Sharia compliant alternative. They are structured to provide returns based on the income generated by underlying tangible assets rather than through interest payment. The next one is the ethical financing and equitable sharing. Islamic investment manager aim to create investment opportunities that benefit both investor and entrepreneurs, emphasizing profit and loss sharing. Next is the prohibition of riba, also the emphasis on real asset. Islamic investment management encourage investment in tangible and productive assets such as real estate, infrastructure project, and business engaged in halal permissible activities. Next, promotion of fairness and equity aims to create a financial system that is fair, just, and promotes equitable distribution of wealth and resources. The next one is safeguarding financial stability, which is prohibiting riba, helps prevent excessive debt accumulation and speculative behaviors that can lead to financial instability. So next one is the prohibition of gharar, which is uncertainty or speculation. So the first one is avoidance of speculative investment, which is investment are structured to have transparent terms and condition. So the next one is the transparency and clarity. Islamic investment management emphasize transparency and clarity in investment contract and transaction. The risk management, investment manager strive to manage risk through prudent investment strategies and diversification. Ethical consideration, investment that involve excessive uncertainty or potential harm to individuals or society are not in line with Islamic principle. Real economic value, investment should be based on tangible asset or service that provide real economic value rather than speculative activities that create uncertainty and instability. Equity and fairness. The prohibition of gharar contributes to maintaining equity and fairness in transaction. So the next one is the prohibition of haram activities. So let's go to another slide. The first one is avoidance of investment in prohibited sector. Islamic investment management prohibits investment in business and industry that engage in haram activities. The second one, ethical and socially responsible investment, which is Islamic investment management focuses on ethical and socially responsible investment. The third one is ensuring halal income. Halal, which is a permissible income, is a key consideration in Islamic finance. The next one is positive impact investing. Investment that involve excessive uncertainty or potential harm to individuals or society are not in line with Islamic principle. Avoiding controversial practices. Avoiding industry or practices that are considered controversial or harmful to society. Next is the Islamic indices and ethical standard. Use specialized indices and ethical standard to guide their investment decision. So the next one is ethical and socially responsible investment. Okay, the first one is the positive impact aligned with the concept of halal, permissible and tayyib, wholesome in Islam, which extend beyond legality to encompass ethical consideration. The second one is the social welfare. Investment are evaluated based on their potential to contribute to social welfare, community development and poverty alleviation. So the third one is the environmental consideration. Investment in renewable energy, sustainable agriculture, and environmentally friendly technologies are favored. So the next one is the profit and loss sharing. Okay, mudharabah is essentially like equity finance in which the bank and the customer share any profit. Musyarakah is a joint venture or investment partnership between two parties. Both parties provide capital towards the financing of projects and both parties share the profits in agreed proportion. Sukuk is the debt finance. A conventional non-Islamic loan note is simple debt, and the debt holder return for providing capital to the bond issuer takes the term of interest. Okay, so the next one is the asset-backed financing. So what it is? Let's go to the next slide. Murabahah is a common form of asset-backed financing. In this arrangement, a buyer approaches a financial institution like a bank with the intention of purchasing a specific asset such as equipment, machinery or commodities. So instead of providing a loan, a financial institution purchases on asset such as property, equipment or vehicles and lease it to the client for an agreed upon period. So the next one is the sukuk. Sukuk represent ownership in an underlying tangible asset, project, business or specific investment activity. So the return on sukuk is derived from the profit generated by the underlying asset or activity rather than interest. Okay, so next is we're going to proceed with the financial instrument. So what it is, let's go. So the financial instrument have five, which is the first one is the sukuk, the real estate investment, equity investment, Islamic mutual fund, Islamic banking and finance institution. Okay. So we are going to learn more about the definition of sukuk. So sukuk is allowing the investor to participate in the ownership of an asset while generating returns based on the income generated by asset. So the next is the equity investment, investing in shares of companies that operate in compliance with Islamic principles is allowed as long as the company activity and financial practice are Sharia compliant. Next is Islamic mutual funds. These funds pool investment from multiple investors and invest in portfolio of Sharia compliant asset. The next one is the real estate investment. Direct investment in real estate properties or real estate investment that follow Sharia principle. So the next one is Islamic banking and finance institution. So these institutions provide various Sharia compliant financial products, including saving account, financing, and investment opportunities. That's all from me. Thank you.